Welcome and thanks for joining the Voice of MPE podcast. Today, we'll be discussing the fascinating topic of payment optimization as global merchants expand their services to emerging markets. I'm Daniel Kornitzer, Head of Global Partnerships at EBANX, and I'm also joined by two amazing industry experts, Alain Delcourt, Fintech Director at Xsolla, and Hagay Elyakim, founder at BlockchainLab. Good morning, Alain and Hagay.
Good morning, Daniel.
Maybe we can take a second just to introduce briefly ourselves. Alain, do you want to go first?
Yeah, sure. So I'm Alain Delcourt, based in Brazil. I'm in charge of the Latam Fintech business for Xsolla. Xsolla is a global video game commerce company, enabling monetizations across all countries, all geographies for video game publishers and studios.
Thanks, Alain. Hagay?
Hi, everyone. I'm Hagay Elyakim. I work in the card payment industry for the last 20 years. I'm specializing in payment optimization, focusing on helping businesses streamline their payment flows and improve approval rates. Excited to be here today. Thank you, MPE, for having me.
Amazing. Super excited about our discussion. Let me start by what we've been seeing here at EBANX in terms of the sort of the confluence of factors. On one hand, what we're seeing is that emerging markets will be the engine for growth for digital consumer expansion, and that at a global scale. I mean, some of the stats I'm looking at show that in the next 8 years, emerging markets will be adding 700 million consumers to the middle class. And so if I look at the growth rates, emerging markets are growing at least twice as fast as the rest of the world. And on the other hand, I guess we have payment optimization as a must to fully leverage a number of trends that we're seeing. First of all, I would say instant payment rails that have and continue to transform the global South. But optimizing is far beyond just enabling alternate payment methods. Incidentally, today marks the 5th anniversary of PIX, only 5 short years in which PIX has processed $16 trillion, which is 7 times the annual gross domestic product of Brazil. 93% of adults in Brazil are using PIX. But it's not just Brazil. Look at Colombia with 𝗪𝗏𝗶, which in a few weeks has seen 30 million consumers, 78% of adults in Colombia register for the service. So it's happening across the global South. The second trend that we're seeing is that cards and APMs coexist and drive mutual innovation. In other words, it's not a zero-sum competition. They basically both are relevant and enhance the user and the merchant experience. AI smart routing and AI native anti-fraud as true game changers in terms of curtailing fraud and enabling higher auth rates. I know that in our case, we use about 100 data points per transaction, resulting in an increase of conversion of up to 10%, which is pretty spectacular. Just the smart routing using AI. Last but not least, stablecoins, which are emerging as perhaps the first global alternate payment method. I'm sure we'll talk more about that. Lastly, I'm just saying that optimizing payments in that context really mean delivering a material go-to-market acceleration or uplift for global merchants, and 2, financial inclusion for hundreds of millions of consumers in emerging markets that can buy the brands they love. So let's turn to the real expert here, Alain and Hagay. Would you mind sharing your experience with practical takeaways around, first, let's go to acceptance rate optimization, payment localization, conversion impact, cards and APMs?
Would love to hear a guy about that first, because I know he's the expert about conversion and card optimization.
Thank you, Alain. Thank you, Daniel. So basically, if we look at the payment optimization from expansion point of view, first of all, about card acquiring, it's better to acquire locally than globally, then your acceptance rates are higher. So basically, it depends on your strategy. There's a lot of flying objects when a merchant partner payment company is deciding to go locally, right? It depends on the mesh of the traffic and the blend of the traffic. So if you're looking to expand globally, there are other considerations, of course, ethics, tax considerations and others, but here we're going to focus only on payments. So let's say you already consider those. I think that the most exciting thing about card payments in specific is that in certain markets, you can increase the optimization of the card payments in about 20%, up to 20%. This is amazing, and this is an enormous number. From the other side, if you go locally, you can support local payment methods rather than only cards. So in the different markets, there are only the most that you mentioned in Latam, but in other regions as well, you have local payment methods that are the majority payment methods that are taking the day-to-day use of payments. And I think that the combination of either taking a payment aggregator that would introduce you as a merchant of record or any other structure would enable you to actually accept more and gain more presence or footprint in those markets, in those countries. Now, from the card optimization, there are many ways to optimize payments. You mentioned smart dynamic routing using AI, but mostly you need to understand that the infrastructure is a bit old. So the current communication that is done through the card scheme network is actually blocking the ability to expand. You mentioned stablecoins. I think this would be the next revolution, but we'll touch that later on, that would change a lot of difficulties and glass ceilings that we hit today with trying to optimize payments, right? So we try to optimize payments by rerouting, by smart dynamic routing, by trying different acquirers, but at the end, we might end up using the same acquirer because we use PSPs. Some of the PSPs might use the same acquirer. There's a lot of things that you need to measure and evaluate when you're looking at your payment optimization strategy. But mainly when you look at the flow of the transactions, there are certain decline reasons or network response codes that you want to look, deep into and really investigate. Even the insufficient funds, which we call the 51 reason code, is something that you want to look into because there are subfamilies. This is a general decline reason, insufficient funds, but there are other things that are hiding beneath that you might optimize that into 5, 7, up to 10% out of what you're getting as a decline reason. From the other end, there are other decline reasons, looking at the performance of the acquirer internally, looking at the transaction flow from the acquirer to the card schemes, and actually analyzing that. So when you look at the decline reasons as a family, you need to break them into subfamilies in order to start optimizing that. That's a really something that needs to be ahead of the strategy. Understanding which markets and which banks are the ones that you want to really contact. So contacting the issuer rather than trying to reroute is better than just sending again and again. The transaction might block you, might create other decline reasons, which actually would come to a dead end. And you find out that you actually manage to improve between 3 to 5% out of that by only, discussing certain issues with the issuers, with the specific issuers, some configuration issues that might have due to the platform is old due to those items that you need to really configure within specific issuers that want to get the transaction in a certain structure, as opposed to other issuers that are more advanced. So we don't forget one thing, that the issuers are also using a kind of a profiling of the acquirers. So you have acquiring bins, you might use different acquiring bins, maybe you get a better result because some of the acquiring bins are being labeled or colored in a certain risk profile. So we need to take those into consideration while we think about optimizing the strategy. That's basically it in a nutshell.
Super.
What I can add from my perspective, I totally agree with what Hagay has been saying. From a payment perspective, cards are pretty complex flows because you have many different parameters to monitor, whether you use 3DS or not, whether you use network tokens, some routings, whether you use card updaters, if you have recurring flows. So it's a game of managing a lot of parameters, and out of this, providing the best optimization, the best possible optimization. And even in AI times, it still requires a bit of human brain. So you need to rely on a trusted payment partner or several ones. And it's a game of getting into your data on a weekly basis until you make sure that you have the right setup and and you stress your scenarios on a weekly basis. Now, maybe I can add a bit of a color related to emerging countries on cards, because cards don't work the same, let's say, in the developed world and in the global south, let's say, right? So the US and Europe are pretty straightforward. You might be able to set up your payment structure in those markets pretty easily with global providers. Now, when it comes to, for instance, Latin America, which I know very well, because I've been in the payment space in Latin America for more than 10 years, it's very different in the sense that first, you in Brazil, you have possibly 20% of credit cards which are enabled for international payments, for instance. So if you start with a global provider and you want to process payments in dollars, you're missing 80% of your targets. Moreover, you have local features like installments, for instance. People in Latin America pay in installments, all kind of goods and services. You go to a retail store and you buy a pair of jeans, you're gonna pay in 6 installments typically. So these kind of features are pretty native when you use local processing providers, and absolutely not when you use global providers processing from abroad, let's say. So I see 3 maybe different way of processing in those regions. One is pretty wrong and going to lead to bad acceptance, is processing and accepting payments only in US dollars. So this leads to very, very poor conversion in basically all emerging markets, and the global south is a big chunk of your business if your business aims at being global nowadays. You have an intermediary setup, which can be practical because it's pretty easy to implement. Which is processing from abroad. You have processor processing from the US or Europe, but in native currency in all markets. And this will lead you to an intermediary level of conversion, not very good, maybe sometimes good enough to bootstrap it if you don't have enough resources to go fully local. But at some point, if you want to have an optimized setup, you need local providers and you need local processing. And this is true for Latin America, like it's true for Africa, for Southeast Asia, and even for Japan. So it's even a bit beyond the global south, I would say.
No, I couldn't agree more, Alain, Hagay. I think that the total performance uplift comes from 7 or 8 different places. And I think what we've seen often is that progression. At the beginning, a merchant is kind of trying to dip their finger into emerging markets. So they use an American, a US MID or a merchant ID or a European merchant ID, and they try to process in Latam. Now, of course, if you're trying to process in dollars or in euros, and if it's an international transaction, not every local card is within the target addressable market. So already you lose in some places 80% of the cards because they're not eligible for those international transactions. So by moving that transaction as a domestic transaction and doing it in local currency, that's the first gain that could be as high as 30%. But then you have network tokens, 3DS, local anti-fraud, the use of installments that you mentioned, Alain, which in Brazil and Mexico are super popular, increased conversion, AOV, average order value, reaching out to issuers, as you mentioned, Hagay, to solve issues of, I wouldn't say misclassification, but lack of consistency in the use of the client code, do not honor, insufficient funds, the offering of relevant alternate payment methods. All of that combined, all of a sudden, 30% becomes 85%. Like you get a combined impact, which is massive. Super, super interesting. Let me bring the second question, which is around smart / dynamic routing and how that can make a huge impact.
Maybe Daniel, if I can, just one word about something also very important to complement with. Yeah, so we have spoken a lot about card optimization, but let's bear in mind that in many markets nowadays, cards are not the key driver of acceptance of payment acceptance, because we've seen a lot we've seen the rise of account-to-account payment methods in Brazil, like PIX, in India with UPI, now in Colombia with 𝗓𝗡. And I mean, in my business, PIX is much more important than cards. And you're going to see the same trend in a lot of countries today. Gamers, they use PIX primarily to purchase their video games. It's easy, it's convenient. You don't need to have a card and a credit limit approved. It has been a tool for financial inclusion, and it has helped open accounts to many unbanked people. So this is very important, and this is typically provided by local providers. So you want to make sure that you have all your local payment methods aggregated, and there are lots, because in each country you typically have one payment method for 𝗓𝗏, very important. You have also some local wallets. These local wallets are getting interoperable, so those are very important topics for the future. And these channels are the most innovative channels. All the new payment flows and payment ideas are getting channels through account-to-account payment methods and others. So go local with local providers, basically.
Yeah, I want to add on that just one thing, Daniel. It's about, when we speak about optimization, we look at the approval rate, and we also need to bring in the pricing fee aspect when you think of strategy of going local versus global. And I think that the pricing is optimizing the local fees by processing locally. First of all, local cards, as Alain mentioned. For example, in France, card bancaire, you want to actually address the market. So you actually have more footprint in the local payment methods processing cards. And the second one is actually optimizing your pricing strategy, the fee. I think it's one of the most important topics that merchants are dealing with today. They want to optimize the pricing to be more efficient. And I think that considering the local strategy is also improving the pricing in general. So I think that that's another part of payment optimization per se.
Yeah, I couldn't agree more with both your comments. And I know we've talked a lot about Latam, but UPI comes to mind with 500 million users and 65 million merchants, out of which about 75% of those could not be profitably served by the card schemes because they're too small. They're maybe street vendors, and it's so easy when they can just put a QR code and have people push a few rupees to buy the mango on the street or whatever they're buying. Between account to account and e-wallets, I wonder whether alternate payment methods should still be called alternate, because in some of these places they're becoming mainstream. Today you can do a card transaction via UPI, an actual card transaction. So it's a crazy world. So should we circle back to smart dynamic routing? Let me hear your thoughts and insights.
I think that when you look at the smart dynamic routing, and we mentioned the pricing part, and together with the overall approve rate, so we want to consider a few things. So when we look at the combination of the available payment methods that you use, you want to be able to actually embed the payment within the end user or consumer experience. So let's say that he does not have the ability to process via card, you can offer him the next available local payment method that he might be using based on the profile. This is the real smart dynamic routing that consumers are expecting to experience when they pay. So having that as embedded, the payment experience. So if there is a decline on the card, you just say, okay, we cannot accept your payment, or retry, in the background is actually trying to think fast forward and saying, okay, this is not working for me. It didn't work for me in the past. I'm going to try to offer him, a little bit of a discount as a merchant with offering him to use a different payment method that might be able to convert him to a sale. So this is one perspective. So from the other dynamic rules, if we use AI, we want to really understand the specific logic of each issuer from the biggest issuers that we're using as a merchant, right? You want to actually analyze, if you're in France, you want to analyze the big ones, the Société Générale, you want BNP Paribas, Crédit Agricole. You want to really understand how the system works because each issuer has a different version of the system. So he might reject certain transactions with one decline reasons, while the others reject the same transaction with a different decline reason. So you need to calibrate that in order to understand if you can actually learn from the mass data that you have and actually merge them together. Sometimes it will be confusing. Sometimes you will divide the reason codes. Sometimes you need to aggregate them. So I think that from the smart dynamic routing strategy, looking at the local payment method versus other payment methods like global cards versus local cards and local payment methods, together with the pricing, and then adding that to the decline reasons and how to route the payment to a different payment method, and having that, if we can do that, to actually optimize the overall flow, to make it as embedded as possible, I think that would be the real, win for everyone. Consumers, merchants, card schemes, and all the other players.
Yeah. In addition, we've seen the rise of payment orchestrators. So some people say that payment orchestrators just have got a new and fancy name, but they are basically gateways, payment gateways, which was what we would use in the industry 10 years ago. It's actually not really true, but because orchestrators are more sophisticated now, like the industry has matured, and some companies are able to provide connectors to many payment processors of all kind of payment methods worldwide, and they help you build your redundancy, etc. And it's a global trend that more and more companies are using orchestrators, especially airlines, ride-hailing services, etc. It can be a bit complex to implement an orchestrator because it requires to implement a new layer in the middle of your payment stack. Not very easy if you have some legacy and already many providers in place directly connected to you. And moreover, it brings you a new single point of failure within your stack. So this you need to take into consideration, because if you need redundancy, you also need redundancy in terms of orchestration at the end. So that's a bit of the tricky points maybe to be addressed when making a decision to use or not an orchestrator.
Yeah, so looking at that, really interesting. So if we're using payment orchestration, it works for cards, but for local payment methods, usually you have a single, you cannot duplicate a wallet transaction. It's a single wallet transaction if we look at different use cases, right, in different parts of the world. But when you look at the payment orchestration part involving or adding AI to that, I think that more and more use cases will be that the merchants, the mega merchants, will start to implement in-house orchestration strategy rather than using third-party. But if we look at the third-party today, I think that Alain is really right, and he just touch the real sensitive point. It's another single point of failure, and you need to adapt to the system. So you're actually coming to optimize your payments, but actually you're going a step backwards in order to analyze, first the configuration, adjust all the improvements you need to put into the system to actually educate the system to enable you to improve your payments. So it's a kind of a one step backwards to go 2 steps forward. But I think that there's still space for those companies, for more, global merchants that are not looking to do any in-house. But as much as AI will improve, I think that more merchants will adapt the strategy to actually build the systems, because it will be very easy to build such a system, not very complex, and it will give them the ability to actually control their payments. And looking at, the way payments is managed today, when you're processing through a third party, you're actually keeping some of your payment information within those companies. So they actually are holding that information. It's a bit, of a headache for most of the merchants, how to release that when they want to move to other providers. And that's basically, the problem that we have with PSPs and any other players. Once the network tokens were introduced, we had a bit of a relief for that, but not all of them are rolling out those network tokens. So it's a bit of a kind of a consideration to take.
Yeah, and if I may add, as a techie at heart, intelligent routing is an area that fascinates me because obviously we're trying to optimize, to increase authorization rates and to lower cost, which could include things like knowing which acquirer is more likely to approve a certain transaction, retry, the intelligent dunning. But it's also data mining. It's, for example, imagine you have a transaction for a subscription that has failed and you're waiting for the right time to retry. Now imagine that you see that same card approved at another merchant. You can say, oh, wow, that card is now working. I'm going to retry that monthly subscription now because I know that a transaction just was approved. Imagine, for example, the use of Visa compelling evidence 3.0 to push back a dispute. If you have a pre-existing transaction by the same consumer in the last 120 to 365 days, which is undisputed, you can use that fact to win the dispute as opposed to having a 30% chance of winning the chargeback. So, it's mining the data, using AI to deliver value for authorizations, for disputes, for retries. I mean, it's an area that really can bring enormous value if done properly.
Yeah,
agree.
Super. The third topic and last topic for our discussion this morning is stablecoins. Crypto payments and settlements. Keen to hear your take on these.
What I can say is we started looking at that, meaning to aggregate crypto acceptance in our platform a few years ago. It's a bit obviously tricky because crypto is not fully regulated. And when you operate a worldwide operation, you don't want to get in trouble in any point of your business. So we started very calmly about aggregating some crypto payment methods. We started with crypto.com a few years ago. Now the scenario has changed a lot because this year the US have kind of backed crypto, meaning that it's fully understood by all players in the market that crypto is here to stay and there is no way back, basically. And we see now this massive adoption of stablecoins, especially in emerging markets, among individuals and businesses also. So we understand that now merchant acceptance is going to be like a very hot topic, and we are actively working on it. We've seen some crypto merchant acceptance providers now being more and more visible, and I think it's one of the key trends of the current year and the current month.
Couldn't agree better. So if I may add on that, I think that the crypto or the stable coins specifically that has been introduced to the payment industry, I think it's a lifesaver. As you know, the overall infrastructure is getting old. The stable coin is the payment on steroids, right? It allows us, there is no topic of acceptance rate, right? It's going to kill that because you're sending payment, either you have funds and, the insufficient funds maybe would be real. And you can see the entire ledger, which is anonymous, but you can see the entire ledger, on chain. You can see exactly what's happening during the transaction confirmation phase, if it's a proof of work or proof of stake. But the idea is that you have too many protocols, you have too many implementations of stablecoins, so you need to choose the right ones. And today, we see that the underlying infrastructure of many companies are turning to be stablecoin. So actually, they're sending funds, they're actually hitting the, anytime record with settlements to merchants. They're improving the entire cycle of funding the businesses so they can get the money earlier and they can actually improve and expand their businesses and be able to go and expand their overall presence. And I think that the stablecoin is a real topic. It's a revolution, right? It's going to revolutionize the payment industry as a whole. Today, it's penetrating in the kind of the background with the platforms that are using it in order to settle. But soon you will see implementations of payouts, pay-ins. The pay-ins is more complicated because of what Alain said, the regulatory part, although the US administration has pushed that very nicely, but still it has some roadblocks. But you see that payouts would be used for with stable coins and maybe other coins, because with the payouts you get the money in fiat and you pay it out, so you have all the KYB, KYC done. And I think that this is the rollout, and at the end, I think that if I may kind of give a kind of fast forward the situation into the future and foresee the future, I think that the card schemes will be holding, instead of a card, a wallet, and they will be the gatekeeper of the fiat into the crypto. So those companies would need to actually make sure that the money that is coming in is fully regulated, all of the KYC done, KYC, and then the entire rails of the experience would be using blockchain rails. Now, this would improve everything we spoke about until now, thinking about ethics, thinking about local versus global. There is no question about that with crypto. It's all global, right? Thinking about the ability to settle fast, thinking of the ability of actually looking at the approve rates in general, right? So I think that this is the real revolution that is happening now. And I think that it will be growing ever and ever as we go towards the next 2-3 years in the payment industry.
Yeah, and I couldn't agree more. Those transactions, stablecoin transactions, are irrevocable, so there is no declines. So at EBANX, we are enabling, pay-ins by way of stablecoins, which are essentially kind of an emerging global alternate payment method, but also for merchant settlements to accelerate treasury flows, so that there is no weekends and bank holidays and after
24/7.
hours. So 24/7. So that makes it exciting, I think. So I think we've come to close to the end. I was just wondering if you guys had any parting words of wisdom for our audience.
Yeah, I think that basically combining all the topics together, we have the today payments that we need to take care of, the here and now. So Alain really described it from the merchant perspective, how to accept payment, where to look for, what to look for when you think about global versus local, accepting more payments as a strategy. The optimization through the smart dynamic flow is something very important, I think, today. And I think the future for the merchants is actually looking at the stable coin. So when they invest, they need to put a kind of look through, implementing more and more towards the stable coin strategy. It will enable them actually to get the money fast, to grow, and actually accept more audience that as the new generation that is coming, and actually using more and more crypto wallets in order to, fund their day-to-day life, right?
Yeah, for companies expanding from US or Europe to the global south, my word of wisdom is to find expertise. Nowadays there are some experts and some companies able at leading helping a lot in leading the expansion across all these complex, fragmented, and very interesting markets that we can see in Latin America, in Africa, in India, in Southeast Asia. So yeah, trust the experts, because they have been working on this for many, many years.
And I would add that there is no single bullet or silver bullet. Like, it's 7 or 8 different factors, one on top of the other. And if you do it right, you can massively increase conversion without increasing fraud or creating any other, negative side effects. So, there's a lot of potential gain by exploiting payment optimization, particularly in emerging markets. So I'd like to thank Hagay and Alain for a very insightful discussion.
Thank you, Daniel.
Thank you both.
Thank you, Daniel, for having us here.
My pleasure. And thank you for tuning in for this episode of the Voice of MPE podcast. And please join us in Berlin, March 17th to the 19th for MPE 2026.
See you there.
See you there.